I'm going to share with you 3 unique ways that you can pull profits from your LLC to pay no taxes or to greatly reduce your taxes. Most tax advisors out there are going to talk about how to make investments in real estate or invest in oil and gas or send money to a charity or a foundation. And that's how you pay less taxes. Well, on my channel, I work with a lot of international entrepreneurs. That's people from other countries with US companies, people who travel a lot, people all over the world. And we try and find the best ways to move the money or set up the businesses or use offshore entities to avoid these taxes. I'm going to go through 3 different examples here and explain how it works, and then at the end explain what you really need to do to ensure that if you do get audited, you can substantiate the payments that you're making and win the audit. I'm trying to make this as understandable as possible because I understand I can be a little technical in the videos. I'm also going to try and keep it under 10 minutes, as is my goal in every video. The first one is a US corporation with real estate. So if you have a US real estate, you're going to pay taxes in the US. You have stuff here. I mean, you're gonna be subject to taxes. Whether you pay taxes depends on if you have profit or not. You're always gonna pay real estate taxes. I'm sorry about that, but I'm talking about income taxes here. So let's say you have 5 rental properties, your total rents of $100,000, total expenses of $20,000, total depreciation of $40,000. That leaves you with $40,000 of profit. Now, what are some things you can potentially do to reduce that or to create more expenses? I don't like to take dividends generally from these situations. If you take a dividend and you're a foreign person, you're going to pay withholding taxes up to 30% if there's no tax treaty. If there is a tax treaty, down to 15%, maybe 5%, depending on what country you're from. But that's going to be a tax withheld in the US, and then potentially you're subject to tax in your home country. And if you're in the US and you take a dividend, it's not a deduction. So you're still in the US, the company's going to pay 21% tax on that $40,000 plus whatever state taxes apply. And then you are going to pay tax on the dividends you took. So there's double taxation with the dividends. Generally, again, we're talking about foreign investors. So what would we generally do is we would pay a management fee to an offshore entity that you have. So many of my clients are like Reggie from Italy. Reggie is the only guy in Italy named Reggie. Reggie is not an American at the end of the day. So Reggie has this corporation that owns all his real estate. He had a great year, great cash flowed $60,000 because again, he had $40,000 depreciation. He cash flowed $80,000 in this example, but he has $40,000 of paper profit. What's he going to do? He's going to send $40,000 of management fees over to his other LLC that he has. He has to report the payment, but these are management fees because Reggie ran this business. He did the marketing for it. He did the strategy. And you can go to ChatGPT or whatever AI you like to use and write up a really good management agreement or contract to justify all the money you're paying yourself. And then you do it. This isn't an insane amount where you necessarily need a transfer pricing agreement, but if this was to be potentially challenged by the IRS, then they can, if you do a transfer price agreement, pay $2,000, you can have an independent guy come and validate what you paid for and say that it's a reasonable amount to be paid per market prices. $40,000 is not going to get challenged, especially if you have all the documentation for it. Example number 2. We have a multi-member LLC with 2 partners, one in Brazil, one in the US. They run this online marketing business. It's crazy, but because one of the partners is in the US, technically this business has a US trade or business and it would be subject to withholding on the partnership level. So if the partnership makes the partnership makes $200,000, then the Brazilian partner's $100,000 of income would be subject to 37% withholding, $37,000 of tax withholding that he's not getting back. We might get a portion of it back. And then he's not getting credit for it in Brazil because he's not going to report it in Brazil. What do we do here? Well, Bob in the US is going to set up his own S-Corp, and then he's going to basically service the multi-member LLC that they have together. Again, a separate service agreement, and it's going to be equal to the same thing that Vlad is doing. Vlad is Brazilian. So Vlad has his own separate LLC. So they have multi-member LLC that's owned by Vlad and Bob. And then Vlad has his own LLC and Bob has his own LLC. And basically we have a service agreement, contractor agreements between this LLC, and then the main one they're using together so that they can pull down the profits of the LLC that's subject to withholding and then move the money to their own spots. So let's say out of this 100,000, they send in 45K, let's say 50K. They say $50,000 payment to this company, a $50,000 payment to this company, and this is break even. And now there's no withholding. We file a tax return, it's fine. Bob still pays tax on his income, but he can actually save money because he can structure it as an S corp. He can do his own investments. He can manage his own stuff. The payments are equal. So because they're equal partners, you guys can determine how much you want to pay out in each one. And then on Vlad's company, his LLC isn't subject to tax because he did all his services out in Brazil. We want proper agreements for these companies, and we want the payments to be like timely according to the agreements. But this is how we avoid taxes in the US for Vlad, and how we actually reduce the taxes for Bob because he is already in the US. Again, this is crazy. I'm going to do a quick plug for myself, the sponsor of this video, James Baker. If you don't want to figure this stuff out, you can schedule a call with me, and I'm definitely happy to like map this out for you and tell you what you should do for you and your business as it's growing. Happy to help you out. Quick plug, video sponsored by me. Option number 3. This is an American owner. So we're talking about if I moved abroad. Now, this is different from a lot of my clients, but if you're watching this and you want to pay less taxes, this is a way that I've helped clients do this. American owner, lives abroad. He has his own consulting company, his own e-commerce company, whatever. I have clients like this. I have Steve lives in Colombia. He married a wonderful Colombian woman, very happy. Everything's going great. Steve pays a ton of taxes because he's a U.S. citizen and he's stuck in the U.S. Or, it could happen another way where you have a guy who lives in France or in the UK, but their spouse isn't in the tax system, and their spouse or a trusted family member, their brother, their cousin, I don't really care. Someone who you love, who you trust, they can consult for you. They can open an LLC. It's generally better to do it with a spouse. I don't want to do it with like a cousin or something. You want it to be someone you trust because you're basically paying them. So you get an agreement. This person works for you. You have to find something that they can provide a service for. Again, with the AI tools we have, we say, look, this I need to hire this person. I need to pay them this much money. This is what they're good at. Find something that they can do and write me a contract for it that's worth this much money, and put it all together so that they're working for me remotely and all that stuff. And then you can get a good agreement put together, something that makes sense, something that's kind of vague, and it's with someone that you work with and talk to all the time. And then if it's a lot of money, if you're paying them $400,000 a year, that's amazing because you're not paying your wife. You're paying an LLC that happens to be owned by your wife. And you can get an independent transfer pricing agreement done to verify the validity, the justification for making that payment. These are 3 different ways that you can definitely pull a lot of money from your LLC to avoid paying taxes in the US. You do need the right circumstances around it. You do have to either be a foreign person who's not paying taxes, and you want to pull profits from a business that is paying taxes, or maybe you have to have a foreign spouse or a foreign brother or someone outside the US who can take advantage of the tax-free LLC concept that we talk about a lot. But it's a concept that, as much as I talk about it, there's still people that haven't heard about it. If you are considering this or considering doing this, we've worked with a lot of clients and helped them set this up for their family members, their spouses, their brothers, whoever, so that we can structure the ownership so that you're really safe, you're avoiding taxes in whatever jurisdiction you're trying to avoid taxes in by not actually owning the thing you're doing. And then from there, we want to make sure we take all the safeguards in place. And we have the right email address, we have the right passport, we keep them as involved as they need to be, and ultimately give you the control that you need to do this. So the important things, again, to document the contracts, get them actually signed, have invoices would be amazing. You can do them yourself, fine. Have meetings, have documentation of the stuff you've gone over, and have justification for that. And then you can justify these expenses. Audits are incredibly rare in the US, which isn't to say be willy-nilly, deduct it all, who cares? I'm not trying to say that. But I'm also trying to say that when you evaluate the risk versus the reward of making a decision which will materially reduce your taxes, you have to factor in the risk of it being challenged, the risk of it sustaining an audit, the risk of going through that, and then evaluate that against the reward of paying less taxes immediately, keeping more of your money. I don't like taxes. That's why I'm making these videos to help you guys pay less taxes. If you need help setting up any of this, I've done it before. I've talked to clients all over the world for many, many years now. Short sell for myself. Again, last plug, like and subscribe. I appreciate you guys being here. Hopefully this is helpful, and I'll see you on the next video.